Hello everyone, how we doing? Can we hear me? Welcome to Derivology Day 2. I hope we're excited, everybody. If you can hear me, give me a feedback response. I hope we're excited, everybody, to be at Derivology Day 2. Can we hear me, everybody? Team, give me feedback. I hope we're excited. Can we hear me? Okay, super amazing, guys. Okay, that's amazing. I'm getting feedback that I can be heard. Right, so we have 4 minutes to start the webinar exactly. So I'll just do a quick recap of what I talked about yesterday. And today we are diving straight into the charts, right? So while we're waiting the next 3 minutes, share this round. Your statuses everywhere shareable. Derivology is on. You should join. Derivology is on. They'll send the link to this Telegram channel so you could send it all around. So we could have those joining, right? So you have 3 minutes to do that. Derivology is on. Right, so while you're doing that, I'll just wait for you and share to everybody that you want to become billionaires by 2022. Derivology is on. Derivology is on, everybody. So let's ensure to join in, right? So by 6:10, we start our lectures immediately, right? Okay, 6:10. So let's get right into what we have for today. Like I said, welcome to Derivology Day 2. Let's get straight into the session, right? So quick Quick update, guys. For tomorrow, last session, there's a very high chance of two things, right? If you walk around me, you've been around me. You know, I like to reward seriousness, right? And one of the ways I do this is by giving out cash, right? To reward serious. I don't know, I just like it. I just see that you're serious about making it in life. Right? So I don't know. I could choose to do anything, literally anything tomorrow. I could give you a software, I could give you money, how I would do it, I don't know. I could just stop in the middle of the webinar, pick a random person, give him $100, or maybe the best person to join in or something, right? And there'll be a very high chance that it's going to be on our YouTube channel, right? So prep yourselves for anything, or if you just ask a random question, keyword, something. Right. So just ensure that you have that prepared for tomorrow, right? So like we started yesterday, we looked up, our general introduction, and looked at the concept of smart money versus retail trading, and we started with the basics of market structure. And I explained that this 3 days webinar is not enough to cover every single thing about market structure, from the higher time frame to the lower time frame to the fractal nature of market structure. I can't cover all of that, right? And I made you guys know we have courses and we have discounts on all our courses. So but let's go on. So today we're looking at a lot, and we'll have to move really fast if we're going to cover what we really do plan to cover. Okay, I can see somebody asking me, right? To get anything you want to get concerning us, go to tradewithbolu.com. Tradewithbolu.com, and you'll be able to get access to anything you want to get. Tradewithbolu.com. Our website is fully equipped. My team will post that on the channel. And also, if you want to have you want to talk to somebody, right? We're not aliens. Our customer experience personnel will post our contact, so you can send out a message and get all you want about Tradewithbolu, right? So let's go straight into what we have for today. Like I was saying, we'll be looking at MRZs and we'll be looking at LGs and mitigations today, right? And I'm taking my time to explain these concepts because this is what we actually put together to actually trade, right? I can't just tell you do this, do that. You don't even know what you're doing, right? If you looked at the webinar I wrote, I'm teaching you concepts. I don't teach just patterns. I teach concepts because patterns, come from concepts that repeat themselves again and again. Does that exactly make sense? So let me explain what I mean. And I know I'm taking my time, right? This is how I like to teach. You're not just cramming random things in your head when I see, M pattern. No, that's very childish, right? It's very simple. Imagine I go to or I'm somewhere and I hear a gunshot. The average person is going to run. Does that make sense? Because it's a gunshot. I mean, except you are, I don't even know what you can be that you won't run. Perhaps you are the one shooting the gun. Right? Now, why am I saying all of that, right? We see a pattern that when there is a gunshot, why are people running? Because in times past, gunshots indicates danger. It indicates they could kill you. Does that make sense? So they are not just running because they feel like running. Does that make sense? There is a rationale behind why they are running. Do you understand what I'm saying? I hope that's clear, right? So we're not just picking out stuff for picking out sake. The rationale behind why these things are done is how I teach, right? And why does this enforce? It's because the market is not a perfect place, and all of us know this, right? And so as you begin to go on, you realize that the patterns or whatever is going to be shown to you is not actually exact, right? But you have the understanding and you know how to further through and all of that, right? So, like I said, we're looking at market rejection zones, order blocks, and imbalances, right? Now, if you look at my slide, what I have here is, before we go, why synthetics? For those of us that don't trade, you don't need any verification until $10K withdrawal, 24/7 trading, no fundamental analysis required, no sentiment analysis. You only need to learn technical analysis, and voila, you can earn. A deriv is very regulated. Lastly, they have more than 20 years experience, right? So if you want to get started, put this link in your browser, bit.ly/start deriv, right? So you'll be able to join in and start trading synthetic indices, right? So I just thought to not, imagine everybody knows how to do that, right? So let's move on even quickly. All right. And like I said, I'm going to be saying some things. This is not a starters course. So peradventure you don't understand what I'm talking about, right? Hop on to tradewithbolu.com. Now, this webinar replay is on our YouTube channel, right? So if you don't know anything I'm talking about, you don't even understand, go to tradewithbolu.com, right? And start with the basic course. It is 100% free. At the end of that course, what I'm saying will now make sense to you, right? So that's just by the way. Okay, so like I said, this is day 2. Well, we're talking about the MRZs, and we're only going to look at 2: OBs and imbalances. Some people call it inefficiencies. Some people call it fair value gaps. Whatever name you give to it, basically. And then we'll be looking at LGs, which is short for liquidity grab, and we'll be looking at mitigations and why they happen. Okay. So straight to the charts. Not too much talk today. Straight to the charts. So let me just share the screen of the charts. So we get straight into work. Okay. So if you can see. Okay, sorry, Tim. I need feedback. Is my chat all good and fine? So I could get straight to teaching. I'm getting feedback that is cracking. Is it my voice or the chats? Okay. Once I get a green light, I move on. All fine, guys? Amazing. Okay, so let's push through, right? So talking about, we're going to look at 2 market rejection zones. Now, I want you to pay serious attention. Really, the lecture really starts now. The market doesn't move anyhow. I'll say that again. The market does not move anyhow. It is not a randomized movement. And if you are a trader, you'll be able to understand what I'm saying. There is a how the market moves. I always like to start from there, right? The day I discovered this, my younger brother will always look at me. Sometimes I wake up in the morning, not sometimes, most of the times, and I pick up my laptop, and he'll say, Bolu, for years now, I've never understood how these green and red lines bring out money. That's how you say. And I don't know, but it's funny to me. He say, for years I've been looking at you. You'll be telling me that this is where you get money for everything. How do green and red lines bring dollars? And listen, this is where I want to start from. Like I said, the market's movement is not random. Imagine you are Nigerian trains are getting better, but if you go to the UK, the US, where they have amazing train stations, right, you realize that the trains don't move anyhow, right? They move from a particular train station to another one, drop off some people, pick up some people, and like that again and again and again. And it's the same way with the charts. Now, this red and green candles is this is a price candle. You know what? If you don't know what price candle is, log on to tradebolu.com. Literally leave this webinar. It's not going to help you if you don't know what I'm talking about. Or perhaps you can stay. Actually, I'll try my best to be as simple. But once you are done, go to tradebolu.com, click on the basic course. It is free. Get yourself acquainted with what I'm talking about. So back to what I was saying, right? So this is a chart of price, right? And I'm not explaining, what it means. Now, you all know, by now that when you buy the market and it goes up, you're going to have profits. When you sell and it goes low, you're going to have profits also, right? Now, here is where a lot of people do not know. The movement of price. Who moves the price? I really wish I could get a feedback platform from here. I would love to get you guys energy. But that's why I said we may most likely get to YouTube tomorrow. YouTube most likely. So I want to get that real-time feedback. How does the price move? Who moves it? Right? That's a serious question. How do the candles move? They don't move themselves. When I was much younger and I didn't know how to trade. When I just came in, I said it jokingly, I was scammed. I never went on demo. I started by trading with live. So when I came on the charts and I pressed buy, then the market will begin to reverse. I'll say, these guys know that I've placed my trade and they are following me to take out my stop loss. And that's how it is for many of us. How does it move? Where does it move? Why does it move? Why does it start moving? Why does it reverse? Which is what I want to begin to deal with today. Right? Are we paying attention, guys? Amazing. Now, listen to me carefully. Or should I start with a higher time frame? Okay, let me start with a higher time frame. The market, let's get back to my slides so I could draw. The market, like I said, moves to what we call, particular zones. And I've termed them as MRZs. I want you to pay serious attention. And I'm going to, use illustrations to explain what I'm saying. Please don't imagine you know what I'm talking about, right? Some of you do. Some of you that have passed through our full-time course. So I want to draw. Okay, so I want to draw. So let me be on the charts. Now, let me give you an example, guys, so you understand what I'm saying. Are you aware that whenever a lady is pregnant and it's time for labor, you would realize that she'll begin to have, if I'm not mistaken, she'll begin to have labor pains, right? Now, when she has these pains, what you realize is that these pains, pay attention, are proof that the baby is about to come out. Are you with me, guys? So now, imagine you're the husband and you're with her in the night and it's around your expected delivery day and you begin to see the pains manifest. And I think they say something like the water broke or something. I don't know. I'm not married. Right? Now, you begin to hear that now. What happens once you sight those pains? What do you realize? Or what do you know? Or what do you guess is about to happen? A baby is about to come out. Are you with me? It's the same way. The movement of the market leaves trails. Trails. Let me write that for you. Leaves trails. Let me write that for you. Trails. Trails. Are you hearing me? And I'll give you another instance. Imagine somebody walks up, walks on a muddy ground, MUD, like mud. It's raining and everywhere, there's mud everywhere. Now the guy walks on a muddy ground and comes inside a clean house. Do you understand? You can use his footsteps to track him. Are you hearing what I'm saying? Now, here is it. The market makers are moving the market. They are in charge of direction. If you don't know who the market makers are, again, hop on to tradebolu.com, get our basic course, go through it. It's 100% free. Now, the market makers, they move the markets. They are the ones in charge of the direction. We are retail traders, we as retail traders, it's just like, for those of you that are in Nigeria, it's what happens, not just people in Nigeria, right? You want to get maybe from here to somewhere else and you don't have a car. Now there's a commercial vehicle, right? In Nigeria, they call it danfo, right? If you're in the US, it's a bus, right? Now, you don't have a car, but you want to get to somewhere. So what you do is you hop into somebody's car and you go in the direction that the bus had pre-planned to go. There's a pre-planned direction of those commercial buses. Does that make sense? It's not a private, maybe a taxi that goes in your direction. The bus has its direction, right? So when you want to go in the bus's direction, you find the bus that's going in your direction and then you go. Does that make sense? Now, it is the same way. These market movers move the market. So what you want to do is you want to be able to look and study carefully. Are you with me? Now, when you study carefully, what you want to be able to do is to get where they are going. Why? Because they choose the direction. Is that clear enough? Now, if I'm able to get where they are going and I jump into the market. Once I jump into the market, before they get to where they are going, I jump out and I take my profits. That's why the institutional style of trading is very profitable, because you are moving in the direction of those who are moving the market. Or let me put it in proper terms. You are moving in the direction of those who are directing the market. Does that make sense? So like I was saying, these guys leave trails behind, right? So when we see some things, we can suspect, right? It's like a bus stop, right? You stay at a bus stop. Why? Because chances are very high at that bus stop, the bus is going to come and pick you, right? So the bus has gone, maybe it's gone to wherever, right? Now, let's say there's a bus stop here, right? So you will come and stand here, right? Because, you're sure that this is a very high chance for you to find a bus. So a bus parks, picks you up, and takes you to the direction. Does that make sense? So we have what we call MRZs. MRZs is short for market rejection zones. So these are high probability zones. If you are writing and I'm going to define this quite slowly. These are high probability zones from whence the market's direction will change. Does that make sense? MRZs are high probability zones from where the market direction will change. Does that make sense? So let me give you an example. Let's clear out all of this. Maybe I should am I having some issues doing this? Give me a second, guys. I'm having a few. Okay. So this is it. Pay attention. The market is going like this, right? Now, I spot an MRZ here. Can you see this? Let's imagine I spot an MRZ. I will not be chasing the market. I will just patiently wait. Does that make sense? So the market is going to come back, pick me up, and give me some good profits. Does that make sense? Does that make sense? Okay. I need this feedback. I want to be sure that you guys are following me. Right? I really need this feedback. But I'm just going to believe and have faith in you guys that you guys are coming on good, right? But always there's going to be a session for question and answers, right? Our customer experience official Pierce is going to post her details. Any questions, fly into our DMs, right? She'll get across to me. And like I said, we'll most likely have the last session on YouTube. We couldn't set that up properly, right? Talk to me, Pierce. I'm coming. If there's a way to do that, Pierce, please do that, right? I'm hearing that we could open the comment section. If they can get that, that would be amazing. So I could get your real-time feedback. So does that make sense? So we are not chasing the markets. We are patient, right? Now, the question is, when are they going to come back? Why are they going to come back? We're going to see that if we're able to cover our scheme today. I'll be so gracious to you guys. If I can't finish what I plan to finish in 3 days, I'll add an extra day. I give you Derivology Jara. Right? So we'll cover up, because I love to explain things even very detailed. So like I was talking about, these are market rejection zones. Now, there are two types of market rejection zones that we're going to talk about mainly today. Number one is called the order blocks. And really, I can't do a very in-depth explanation to this. I did that in my course, right? If you sign up for a professional course, I have 25 in-depth lectures, right, that deal with institutional trading. And not just lectures. I've told you how we train. We don't throw videos at you. That training system has never made sense to me. No. You will do video one. Then there are to-do tasks, right, to prove to me that you understand. When you do it, you will bring it. I will verify it. I'll correct you. Then you go to video 2 all the way to 25 before you move on to the next stage, right? We literally train you like you are in a school. And all of this is at your own pace, right? You can hop on to tradebolu.com and look it up if you're interested. But back to what I was saying. We call these order blocks. Order blocks. Can you see? Order blocks. Now, what is an order block? And how do I spot an order block? And I want you to pay attention to how I'm going to define an order block, right? An order block is simply, pay attention. When we have a bullish market, or let's imagine this is candle 1, right? And then we have another candle, okay? And then we have another candle in a downtrend. Are you hearing me? Let's say it just keeps on going like that. Now listen. Let's say we're in an uptrend before. If you don't know what uptrend and downtrend is, again, sorry for my journey, go to tradebolu.com and take up our free course. I hope I'm drawing this well. I can't even access for some reason. Give me a second. Trying to get out something from here. Oh. I'm so sorry, guys. Okay, so but if I can't do that, let's just go to another page. Okay, so like I was saying, so now you have an uptrend market. You have an uptrend market, right? And as it's going up, pay attention. Suddenly, the market wants to change direction, right? Now we now have a last block. Pay attention. And suddenly we have an impulsive move from that block. Are you hearing me? Usually all these guys will be green and these guys will be red, or whatever color your chart is. If you don't understand, calm down. When we go to real charts to make sense. The last block is the order block. The last green block before the red block is the order block. And calm down if you don't understand. Be patient, right? So let me do something for you. I think if I go to the charts, it will make more sense. So let's go to the charts. I'm going to share my screen and go to the charts. VIX. Okay, so you should be seeing my screen now. Team, please confirm this for me. Thank you so much. Okay. So let's pick a random pair. Let's pick an H1. Let's take off all my markings. Yes, I do analyze. Use a lot of markings on my chart. So let's see something. Well, let's go to H4, something worthwhile. Okay, thank you so much. I've gotten feedback from the team. Let's start with what I'm saying. So can you come? Let's zoom in so we see what I'm talking about. So I want you to see something, guys. Can you see red candles as the market is coming down? Let me see if I could envelope this zone. Exactly. Can you see that? Upon which I have a blue block. Can you see? Can you see this blue block? My goodness, I need this feedback. Yes, you were talking to me about something about activating the comments. Please talk to me. If that's possible, let me know. If we're going to take 2 minutes to stop and do that, I think that's amazing. Right. So I'm super sorry, guys. Yes, talk to me. Look that through. Give me a second. I'm just getting feedback. I really want your comments. Okay, thank you so much. So do a quick search and let me know. Okay, so back to what I was saying. So you can see the blue box. Can you see red candles going down? This is a downtrend, all going down. Can you see? Downtrend. And then what do you see? Downtrend. Amazing. What's the next thing you see? Suddenly, we have the trend. Can you see an impulsive move? Can you see this green candle? Impulsive move. From that point on, let me zoom in. I'm hoping you guys can see this clearly. Now, the last red candle before that impulsive move is what we call the order block. Does that make sense? Now, remember what I said. We are not in a rush. Imagine you saw this order block and you just waited because you know the market is going to come back. And I'm going to tell you what the market is going to come back. Now, can you see this? I want you to look at this. Look at this. The order block is the red block before the green. Can you see how the market came exactly to the order block? Once it came back to the order block, what did you see? It just picked it up and what can you see? Buying profits. Some of you don't know what this move that I just drill is. And can you see how it's still going? Impulsive move. Why? Because you are trading in line with the what? The institutions. Are you with me? Someone is asking me if we could use Zoom. We had that consideration in mind, but Zoom has a 30-minute limit, and we were not sure if we're going to pay for that. We had a lot of rush arrangements basically, but like I said, we're going to find a way to get your comments, right? But my team is working hard to see if that's possible on Telegram. But if not, just believe. So let's look for another example. So for some of you that think maybe this is tumbo, let's take out all of this. Let's take out all of this. Don't worry. Let's take out all of it. Okay, so now look at this again. Take a look at this block, guys. We're having an uptrend here. Can you see that? And suddenly, can you see the last block, the last green block before the red move? The other block. Can you see? Now, can you see how the market came to that zone? And what do you see? A move down. Can you see that? Right? Order blocks are so powerful. There are 4 types of order blocks, which I'm not going to deal with here, right? But like I said, we tackle that in depth in our courses, right? There are 4 types of order blocks, and I'll show you how to refine each and every one of them. But this webinar, we can't have that time. Give me a second. Okay. Give me a second, guys. I'm so sorry. We're trying to look up something. Okay, they worked on something temporary, but like I said, I will I'm so sorry, guys. Okay, you guys keep working on it. Amazing job, but behind the scenes, Josephat and Pierce, Major, you guys just work on that. So let's keep on, guys. So what was I saying? That's how other blocks work. The last green block before a red impulse, a bearish impulsive move is the order block. Let's take a look at this one. Can you see this order block here? Can you see that? Exactly. Can you see how the market came back there and voila, all the way down, right? So let me look for another pair to show you that this works every single place. My goodness, we're seeing it happening. Can you see this, guys? Look at this order block. Can you see? Can you see how the market came there? Directly to that point. Directly to that point. Can you see that? And can you see how it came exactly to that point before going back down? Right? So every single time, that's how the order blocks work. It is going to come back. It is going to come back. Does that make sense? So now you ask yourself, sir, but I'm looking at these charts and it seems like it's not coming back to all the single order blocks. How will I know the one is going to come back to? Right? How will I know the one is going to come back to? Right? Now, I'm going to answer that question. But before that, there are two market rejection zones that I talked about. There are a lot of rejection zones, but we're talking about two in the Derivology in this webinar. So let's look up the second one, right? So let me go back to my slides. My team is working hard. I need to get your feedback. Like I said, I apologize that we do not have a feedback currently with this setup. Right, my team is working head over heels trying to get a feedback from you, right? So whatever you guys can work on tentatively, just use it. I want to see the comments of people so I can know if I'm making progress. Does that make sense, guys? Okay, that's amazing. So let's go to the next market rejection zone, and I'll just change my screen all the way to that. Okay. Okay, so can we see this? Okay, I think they've created something temporary for you guys to be able to at least talk in, right? So please, if go to the group and just follow their instructions, and I mean they'll be able to get us feedback, basically, right? Okay, so now what are the next one, market rejection zone, is what we call imbalances. Imbalances. So what is an imbalance? What's an imbalance? Give me a second. What's an imbalance? What's an imbalance, guys? Okay. What's an imbalance? An imbalance occurs when you have, pay attention, right? And I'm going to use the basic times of imbalance, right? The basic type of imbalance that we have. Well, we have a candle like this, right? And then we have the wick, and then we have another wick. Does that make sense? And then we have another candle here. Am I drawing the correct thing? Okay, yes, I am. Pay attention. Sorry. Okay, we have the wick here. We have another wick. And then we now have a third candle. And we have a wick and another wick. Does that make sense? Okay. Now listen. Between this wick of the first candle and the second wick of the next candle, there is a space. And you see, this space is called an imbalance. Now, the whole ideology of how an imbalance works, I really cannot deal with that, right? We have 15 minutes to the end of this webinar, right? I really cannot deal with that. So now let's look at for the uptrend imbalance. This is what we'll have. We'll have this. Okay, thank you so much. I have an amazing team, guys. You guys do not. You have no idea what goes on behind the scenes, right? You know, I think they've worked out something, so I can get your feedback, right? Okay. Now this is the second for the bullish. Okay. Now can you see? Okay. And then you have the third one. Can you see that? The third candle. Right. So look at this. Right. This space in between is called an imbalance. I'm sorry if my drawings are not amazing. So what are we saying? We are expecting the market to come back to this imbalance and then fly up. And in this case, we're expecting the market to come back to this imbalance and fly down. Are we clear on that? So now that we have a comment, join the link of the channel so you can comment. That's what I'm seeing, right? That's the instruction they are giving me to give you. So I want to see the comments. I want to see, do we understand the imbalance up to this point? Do we understand the imbalance? There's a link in the channel. Join it and type your comments there, right? Do we understand what an imbalance is? Do we understand the diagram that I'm drawing? Okay, I'm seeing feedback. Amazing. I love feedback. That's amazing. That's amazing. Okay, I'll just wait for some more feedback. We have about 50 people live. Okay. You understand what an imbalance is? Amazing. That's amazing. I'm waiting for some more feedback. Join the group and type your comments. Okay. That's amazing, guys. That's amazing. So I'm going to stop at imbalances for today. Chances are very high. I will give you an extra day if I can cover up. Does that make sense? It's either I give you an extra day or our head of education will just teach on that last day, because we have things all scheduled up down to the end of the year, right? So if I don't teach that last day, our education head is going to teach, and I mean, he's super amazing in doing all of that. Okay, so let's look at examples of market rejection zones, imbalances, and I'll take our questions, and perhaps we'll call it a day today. Okay, so let me share the Derivology screen. Sorry, I was saying something that as the market is going, we don't chase the market. We know where it's coming back to, so we are just patient. Let's take a look at the two market rejection zones that we've looked at. Now look at, is this not another block? Isn't this another block? Can't you see how the market came back to that other block and did what? And flew up. Look at the momentum with which it used to fly. Can't you see? It's proof that that's institutional power. Now look up again. As the market is going up, he left an imbalance for us, which is this blue box which I just marked. What's he telling us? It's coming back. It's coming back. Right? So you as a trader, you are not looking to chase the market. You are just patient. Let's look here. Look at what happened here. we had another block. Can you see this? Can you see how the market, perhaps I should zoom in. Can't you see how the market came back, came back into this order block and began to zoom down, right? So let's look up some other places where we can find imbalances. I'll mark maybe 2 more examples and we will just come to an end, right? I'm looking specifically for imbalances, right? So let me take out all the objects on this chart. Okay, amazing. So can you guys see this imbalance here? Can you see it? Large imbalance. Can you see how the market came back there before moving? I want you to notice once the market gets to any of these zones, look at the energy with which it pushes up from that area, because those are market rejection zones. Does that make sense, guys? So I've dealt with 2 major market rejection zones, our order blocks and our what? Imbalances, right? So I'm going to take a pause today and I'm just going to take questions because we are really behind schedule for today. So I'm going to take questions. I want to take questions now. Do we have any questions? Do we have any question? Do we have any question? Right, let me just take questions. Any questions? Any questions, anybody? Just go and type. We'll have those questions taken care of. Okay, now listen. There is going to be a content, the head of education has just told me, right, that coincidentally they plan content to explain in depth on imbalances, and it's going to be out tomorrow, right? So head on to our YouTube channels. How do you spot the order blocks? That's what I just showed you. It's the last red candle before an impulsive move on a green candle, and vice versa for a red candle, right? So like I said, the head of education told me there's going to be content on imbalances on our channel on YouTube. So please post the link. Ensure you subscribe to our YouTube channel, right? For more content. It's all free on YouTube, right? So do I have any other questions to answer? I'm trying to look up your comments, guys. Give me a second. Okay, I don't think I can see any comments for now, so that's fine, right? So in the absence of any questions, some of you that are saying, sir, this, that, the bitter truth, the order blocks give false signals once in a while. In foreign exchange trading, there is nothing 100%. I can't see the questions. They are telling me there are questions. Is it just me? Help me, please. I can't see them, but I'm answering what I can. So in foreign exchange, I'm going to talk about that on the 3rd day or the 4th day, one of the two, right? Why trading is profitable. Does that make sense? Trading is not a game of getting things right. Trading is a game of learning how to get things right. Are order blocks support and resistance zones? No. Support and resistance zones are different from order blocks. You'll find that in retail trading. Are the OBs and mitigations 100% correct? If anything was 100% correct, Elon Musk will not be the richest man. Forex traders will be. So that's why there is always risk management. And if you don't know what risk management is, look up the basic course. What's best time to trade index? Now, my goodness. Okay, I've answered that. The best time to trade indices. Now, depends on the indices you are trading. I've tried to study around this. Now, because they are synthetic and they are generated, I use the word by system, we really cannot know. They are not trading sessions for indices, right? But listen, I've noticed personally, if you're trading things like boom and crash, they usually do around 5 a.m. and 6 a.m. in Nigeria. I'm the same thing. I've seen generally for me, I'm not the guy, or indices don't do me well when I'm trading in the night time. So you want to stick to the day. This is just from what I've seen from trading experience. Talk to me, guys. Any other questions? Okay, so I think that's it for today. We'll continue our class tomorrow, right? Like we always say, if you want to be trained and funded by me, right, this is the only training program that I know that will train you, not give you random videos. Once you are done, we will fund you. You fulfill our requirements, we're going to fund you. Right, so we're going to give you $10,000, not demo account. We'll give you a 10K live account, right? And then you trade it and then you make profits. And why do we do this? We really want to change people's life, right? There are three major challenges in trading: skill, emotions, and capital. We train you by giving you proper skill. We handle your emotions. At a point in your trading course, even before we give you $10,000, I'll give you $50 to trade, right? I'll give you $50 to trade. And with the $50, if you lose it, no problem. Does that make sense? Right? What we do there is we actually do train your emotions. Does that make sense? And then we give you capital to fly on, right? So imagine you make 10%. And do you think 10% is hard to make? When we are done with this course, you see. Imagine you make 10% of this account in a month. You are not greedy. And for those that are in my trading course, you know that you can make 10% in a trade. If you make 10% in a month, that is $1,000. Do you know how much that is in Nigerian naira? That is 50K. So that's 50K, 500K. So imagine all you are making in a month is 10%, 500,000 naira times 12. Do the math and become a millionaire in 2 months, right? Does that make sense? And like I said, it's ending tomorrow. We'll be giving a discount, 20% on our courses. Just use the coupon Derivology upon your checkout, and you get a 20% discount, and it's valid till tomorrow. Right, so log on to tradewithbolu.com and click on professional course and get access, right? Join our vibrant Telegram community. And like I said, you must have realized that by now that I'm actually teaching you, right? So it's not a clickbait webinar. So I'm going to see you tomorrow, right? So ensure you connect on all our platforms, right? On Telegram, please kindly ignore this number. Send a message to t.me/PPS. Let me put that here. We'll correct that before tomorrow. I'm sorry, P_PS, right? PE. My goodness, I'm sorry. This writing pad is not the best. If you have any questions on Telegram, and you get a response as fast as possible on Instagram, check out our website, and you can send us an email. We have an amazing responsive team that will get to you as fast as possible, right? So that's it, guys. See you tomorrow on Derivology. And like I said, I could give you an extra day for free if we don't cover up. Have an amazing time, guys. See you tomorrow, same time, 6 p.m. Derivology. Have a great day, everyone.